Hey guys, welcome back to the channel. It's Pete. This is where we talk about money, finances, where we give you information, education to help you make the best financial and investment decisions possible. So if you're finding yourself on YouTube, Googling videos because you want to learn about money, more specifically, you want to learn about investing, then this channel is definitely the one for you. You're probably tired of searching videos and people using jargon or people using words that you don't understand, and then you leave that video even more confused than when you actually got there. What I do here is explain things clearly. I use simple, plain English. If I use jargon, I will tell you exactly what that jargon means and how it applies to the context in which we're talking about it. So I try to be as concise as possible and explain information in the simplest format possible. I am a qualified financial advisor. I've been in the industry for 15 years, so I know this stuff pretty well. And my job and my role, my goal here is to empower you so that you can start to invest early, regularly, and start to create wealth. So if I've just described you, definitely subscribe, definitely hit that like button, and definitely turn on notifications. I upload every Tuesday and Friday at 5 p.m. Sometimes I upload midweek as well. So with that being said, this video is going to be a review of Hargreaves Lansdown and their stocks and shares ISA offering. ISAs are very, very popular. If you've followed me for a while, you've subscribed here, you watch my videos, you'll know that I've always said ISAs are the first place to start. The first rule of financial planning is to think tax efficiently. So ISAs are a great place to start. I referenced a lot of basics in the video on Tuesday. So please, guys, go and watch that because I can't repeat those basics given what we've got to go through and time. I'm just going to try and keep this as concise as possible. So definitely go watch that video for the basics. This is an execution only service, which means that if you're using them, Hargreaves Lansdown, that is, you kind of need to know what you're doing. You kind of need to know the language. You kind of need to know what you're doing. So a lot of the basics that I covered in Tuesday's video will definitely help you. I'm going to cover some of the basics around ISAs, which are important. But again, I've done a ton of videos, which I'll reference to shortly, where you can pick up some additional knowledge around ISAs if you're confused about the contribution rules, so on and so forth. Now, with that being said, please grab a pad and a pen, make some notes. You can pause, go back, stop this video as many times as you like, watch it as many times as you like. With that being said, let's crack on. All right, let's talk ISA basics. So ISA stands for Individual Savings Account, which means that you can only hold it in individual names. It can't be joint with your husband, your wife, your spouse, family member, relative. It is an individual account. Now, every single year, the government allows you to save £20,000 into your ISAs. That is the allowance that they provided right now, and it's still current right now as of October 2020. So £20,000 every single tax year. Now, the government being the government couldn't just make your ISA tax year January 1st to January 1st each year. No, it's April the 6th to April the 5th. So between that period of time, you can save £20,000 into an ISA. That's by contribution, contributing into an ISA, which is essentially you paying in money to your ISA. Now, contribution is a really important word. In fact, it's the operative word when it comes to ISAs. One of the big questions that I get is, well, Pete, if I pay in £20,000 in it, if after a year it's worth £25,000, am I over my contribution limit of £20,000? The answer to that is no, because a contribution essentially means that you've paid money in. If you pay £20,000 into an ISA and you got £5,000 due to investment returns, that investment return isn't a direct contribution by you. So therefore, you're fine. You won't be in breach of your £20,000 allowance. And that number could be as big as it wants. You could pay in £20,000, it turns into 30, 40, £50,000. You will still be within the spirit of the rules. Now, there are a number of nuances around ISA contributions, what you can and what you can't do. Watch that video right there. One thing I will reference here, which I know is a big thing, I get lots of questions about this, is what about if I'm saving for either my first home in a lifetime ISA or for retirement in a lifetime ISA? Can I pay money into Hargreaves Lansdown, then also pay money into a place somewhere like, I don't know, Moneybox, for example? The answer to that is yes, because your lifetime allowance, your allowance for a lifetime ISA, I should say, is £4,000 of your £20,000. So because you can only pay £4,000 into a lifetime ISA, you still have £16,000 remaining that you can contribute. So you can contribute the remainder of the £16,000 any way you please. But again, you need to be mindful that you don't breach the £20,000 limit. So that's just some ISA basics to get us started. Let's jump onto my computer. I'm going to walk you through some screens and just show you what Hargreaves Lansdown essentially offer. I'm going to focus on a number of things and bring it back and just kind of conclude it. And hopefully you guys will be in a better place. But as always, guys, if you have any questions, the comment section is where to leave them. I make sure that I read every single comment. I try to reply to every single one of them. If you want to have a private conversation with me, then you can feel free to DM me on Instagram. Again, I do read every single one of my messages and respond to every single one of them as well. It might take me a little while to get back to you, maybe a day, day and a half, but I will respond to any questions that you send me. So let's jump onto their website. So this is the Hargreaves Lansdown website. And if you watch the video on Tuesday, I mentioned that they have a really good learn section. And look, spend some time after you've digested this video, maybe watch some other videos here on YouTube, read the ISA guide, because this will give you a really good fundamental grounding in what ISAs are. It's definitely a good investment of time. Download that, read through it so you get your knowledge to where it needs to be. But for the purposes of this video, I do want to pay attention to the ISA section here, and I want to pay attention to the stocks and shares. Again, they have a lifetime ISA, which again, you'll use for purchasing your first house. You get a bonus from the government, or retirement. If you're a parent, you want to open an ISA for your children, you can also do that here with a junior ISA. But I want to focus on stocks and shares ISA specifically. Now, Hargreaves Lansdown are really, really good at laying out information quite clearly and simply. So what you'll find here is you've got a video where you can just get the concise information about what ISAs are, kind of the stuff that I've explained here already. And you can also download the video transcript as well. But it gives you very plain English what it is. £20,000 you can invest every tax year. Explains what the tax year is between April the 6th and April the 5th each year. And it also goes through charges. So this is a really big thing with Hargreaves Lansdown, one of their big winning points. And that is the fact that their annual charge for holding investments in a Hargreaves Lansdown stocks and shares ISA is never more than 0.45%. Now that is actually key, because if you're using people like Moneybox, for example, you're going to be closer to 1%. So just on comparison of cost, Hargreaves Lansdown are really, really, really competitive for that reason. And it kind of gives you an idea of what those splits are. What they do have here is kind of like a charging structure. So for your first £250,000, it's 0.45. Anything between a quarter and a million, it's 0.25. A million to 2 million is 0.1. Then a values over £2 million, it's being held at zero charge. So that's really, really good. And it gives you an example of what account charges might actually be as well. So it shows you that if you've got £50,000 in a fund and £5,000 in shares, so a fund essentially will be a collection of shares, so a basket of shares. Whereas if you have £5,000 in just shares, so you might have bought Tesla, Amazon, for example, AstraZeneca, a few other companies. If you split your £20,000 allowance, it's just giving you an example of what your charge would be. So it would be 0.45 on each of the components. £15,000 in fund, £5,000 in shares, 0.45. It means that total charge for the year is going to be £90. And again, that is very competitively priced. Now, I do want to highlight something that is very, very important. I get questions about this all the time. I get emails saying, I've got a Moneybox ISA. However, I'm now thinking of moving my ISA to Trading 212. There are a couple of things that are very, very important here. First and foremost, you have to understand that the way you invest with Trading 212 is very, very different to how you invest with Moneybox. With Moneybox, you are essentially buying a ready-built portfolio or investment full of shares, full of bonds, full of other elements or asset classes. And again, I explained a lot of that in the video on Tuesday. These are the fundamentals. So definitely go and watch that video. With Moneybox, you're getting a basket of things that you invest in. With Trading 212, you are essentially putting your money into companies directly. So Amazon, Tesla, Facebook, whoever it is that you fancy buying. The way I explain this is to compare what you're getting with Moneybox as a box of quality treats, chocolate, sweets, everything in one nice package. You've got a good variety of chocolates in there. Whereas with Trading 212, essentially all you're getting is one chocolate, one sweet. That's it. So it's really important to understand that there is a difference. Now, you can hold individual shares. So you can buy one share with Hargreaves Lansdown. In fact, I hold my Tesla stock here. I hold Walt Disney here and a number of other companies. They do have dealing charges. And this is one thing I thought I'd highlight, because with Trading 212, you get all of this commission free. And for many people, this is a deal breaker. They don't want to pay the fees, and for good reason. If you're investing £100, you don't want £11.95 going into dealing charges for the privilege of you buying shares with Hargreaves Lansdown. Now, again, they do have a structure. So if you're dealing on a regular basis, anywhere between 0 to 9 deals per month, it's £11.95. If you're doing 10 to 19, it's £8.95. If you're doing 20 plus, it's £5.95. So you do have that charging structure. I would argue that they are going to have to start looking at their charging structure as the likes of Stack, who I'm going to be reviewing next week, Trading 212, Free Trade. As they become bigger and bigger and bigger, they're going to have to start looking at this charging structure. But with that said, some of the things that Hargreaves Lansdown provide you, and we'll talk about this separately when we get onto buying stocks directly in another video, is a lot better than what you're getting with the likes of Trading 212 and definitely Free Trade. There's a lot more here around how the charges actually works. It's worthwhile actually paying attention to this. But one thing I do want to do is I do want to spend some time on, let's have a look at the calculator actually, because the calculator is actually really important. And again, it allows you to kind of plan. So we'll talk about this a bit later on, so I won't focus on this, but your ISO allowance is £20,000. So let's just say you wanted to contribute on a monthly basis. You can use this toggle right here to ascertain, well, if I only contribute £100 per month, this is what you're going to end up with. And you can then have a look at where you are. And again, if you look at these, depending on your attitude to risk, so we talked about this again on Tuesday, what level of risk you want to take. It also shows that if you're a medium risk investor, that if you invest, let's just say £300 per month, then it shows you on here that as a medium investor, if I can get the £300 right, there we go. If you're a medium investor, then it means that after 20 years, it's projecting your investment value. So it's showing you that after 20 years, you would have £106,246 in your portfolio if you were to save £300 per month for 20 years, and you're getting a 5% return on average every single year. And it gives you the disparities of what you've contributed and so on and so forth. So this is a really, really good function that you can use. You can go high risk. That's 148. Let's just say you're doing, £20,000, for that entire time. Then all of a sudden you're looking at £822,000. If you add £20,000 into your ISA every single year without fail for 20 years, adding that monthly. These numbers can be quite staggering and something you should definitely use to kind of help you build towards your goals. So this is really, really good. I do want to talk a little bit more about this. So let's just go back up here and explore how you can invest with them. So there are two ways that you can invest. You can do it yourself, which means that you are basically choosing from over 2,500 funds, shares, investment trusts, and you basically build your own portfolio. This is very much a certified service. You have to kind of know what you're doing. If you're going to be picking ETFs, you need to understand what ETFs you're going to be picking. If you're going to be picking shares, so stocks in companies, so Tesla, Amazon, you're building this portfolio all by yourself. You kind of need to understand what the businesses are, what the businesses do, what their profitability is like, their balance sheet, whether they're paying dividends, whether they're not paying dividends, whether that matters to you or not. You need to know all of that yourself. And you can start with £100 or £25 per month. Again, with this, to open an account with them, you have to then provide your national insurance number. So here, you literally click on that and you just fill in the details that you see on this screen right here. But what I want to do specifically is just go back a couple. I actually want to talk about their portfolios. So this is you buying ready-made portfolios. So again, think of it as you're going to be investing your money, and what you're essentially going to do is you're going to get a box of quality streets. So for your £1,000, your £1,000 will be distributed amongst maybe 40 or 50 different companies. That's very, very different to putting your £1,000 into one company. Your risk is a little bit higher. So I want to talk a little bit about the ready-made portfolios. So let's click on this and see what we've got. Now, again, the video on Tuesday, I spoke about investment goals. You have to be clear on why you're investing. My opinion is this, and you may disagree, but I firmly believe that if you're in your 20s and your 30s, even your 40s, then really you should be investing for growth, primarily. Now, people may have different outlooks, different objectives in life, which mean that you're investing for income. But if you're young, able to work, your ability to work, generate cash is the engine for you to create wealth. I'm going to repeat that again. Whilst you're young, investing, using cash that you generate now is key to wealth creation, because what you want to do is you want to get all of your money, as much as you possibly can, put it into the stock market, let it compound over time, because that's where you're going to get benefit, you're going to get growth. So let's just say you're investing for growth in this example here. You're then going to be asked what kind of level of risk you want in your portfolio. And again, I covered this on Tuesday. What's your attitude to risk? What's your appetite for risk? Are you a conservative investor, a balanced investor, an adventurous investor? And it basically shows that if you choose a conservative growth portfolio, it aims for modest growth, but with reduced risk, though it can fall in value. If you're balanced, well, it holds a broad spread of investments aiming for capital growth. And if you're adventurous, well, it aims to maximize capital growth by focusing on higher risk, higher growth areas. So let's have a look at all three very, very quickly. If you go conservative, what you'll find here is a portfolio summary. And essentially what this is telling you is you need £1,000 to set up an account with Hargreaves Lansdown. It's telling you that around about £400 of your money is going to be invested in shares. These will be companies. These will be Teslas. This will be Facebook, Amazon, Walt Disney, Coca-Cola, the big names that we all know. So you're going to have a good proportion of your money buying those companies specifically. Then you're going to have bonds in there. They could be government bonds, they could be corporate bonds. And again, I did a video where I talked about bonds, so definitely go and watch that right there. So with a bond, you know exactly what you're going to get from day one. I cover all of this in my investment course, which I heavily referenced on Tuesday. So you know about £520 of your money is going to go into bonds. Then you're going to have the rest of it go into other. Now, what they do here is they provide you their top 10 underlying holdings. So this is the top 10 places where they are putting your money. So again, if you wanted to do further research, you can literally just Google this Invesco tactical bond and find out what it is. Now, because it is a bond, you're going to have a known return within this. And that's always some comfort for you to understand, bearing in mind that you're a cautious investor, but you've got your top 10 there. I'm just going to go onto this one just to see. It gives you a graph. So again, it's just giving you a pictorial kind of representation of what you're getting. So most of it's going to be in bonds. That's your share allocation there. Then it gives you a geographical breakdown of where your money is invested. So essentially, majority of your money is invested here in the UK. You've got some in Asia Pacific. Then that's Europe. And then you've got the US there. So from a geographical point of view, you're going to get a lot of diversification. Diversification is key to reducing your risk. Let's have a look very, very quickly at an adventurous growth, because I want to just demonstrate the disparity between the two. And here, essentially, you are pretty much invested in companies. So £910 of your money is essentially going to be invested in companies. So Amazon's, Facebook, so on and so forth. Again, you need to understand the difference, the correlation between how companies operate and how things like bonds operate. And again, in the bond video, I explain how they're different. But again, this is a very high risk strategy. So if you're not the kind of person who has got a high risk sort of outlook or an attitude to risk, then you may want to stay clear of this. But again, you're going to have the top 10 underlying holdings in here. So you've got Finley Park American, you've got Artemis, the money is essentially invested in. Again, you can Google each of these to find out exactly what they are. Now, within this, we have a look at it here. You've still got that geographical kind of spread, but you can see here, most of it is in shares. You've got very little in bonds, very, very little in cash. One thing you could also do, just in case you are curious, is you could click on this key investors information document here, and it will give you a little bit more information about what the fund is designed to do, or the portfolio is actually designed to do. This is very worthwhile reading through. It may sound like gobbledygook to start off with, but it's very, very simple in just explaining that the investment objective of the fund is to provide long-term capital growth. It tells you on a risk scale here, out of 7, that this is a 5, so it is higher risk. It's not down the scale here. It is above halfway, so it's approaching towards that higher risk element. And then you're going to have some past performance data here. Now, this is really, really important because essentially, past performance is no indication of future performance, but you can use it to gauge to see how this fund has actually performed in the past, given if there was a crash in the market, for example. But it's worthwhile looking at these documents, guys, because this is really the meat and potato of where your money is going to sit. Again, I've covered quite a lot here. So if you have questions, leave them in the comments. And essentially what this is telling you here is that 80% of your money is going into this, 20% of your money is going into that. So really, really, really worthwhile paying attention to this section here for anything that you do with Hargreaves Lansdown. Then you've also got a section here with costs and charges, which basically breaks down the cost of the investment over a 5-year period. So if your initial investment is £5,000, the Hargreaves Lansdown fees will be 120. You've got investment charges there, which they break down here too, of £454.03, which means that over a 5-year period, your annual charge per year has been 2.14%. Now, many people will say that that's expensive for a portfolio, but again, when you're trying to pick your provider, it's really important that you do a cost comparison as well. So also worth mentioning is that Hargreaves Lansdown, for a period of time, are also offering a cashback deal for people who invest with them. And it's going to be running between the 5th of October and the 10th of January 21. So it's running right now. And look, these aren't life-changing amounts of money, but given the fact that we are in a low interest rate environment and we're possibly going to be looking at negative interest rates potentially, it's nice to be able to put your money somewhere and at least know that you're going to get some money back. So again, the numbers aren't phenomenal. They're not life-changing numbers, but it's something. So the tiers are, if you've got anything between 1,000 and 4,999, you get £20 back. For 5,000 up to 19,999, it's £50. Then 20,000 all the way up to 49,999 is £100. So something that might benefit you, something that's worth mentioning. There's a lot that I've covered here, guys. A lot that I've covered here. I'm sure there are going to be questions. So make sure you leave your questions in the comments here. But I hope that has helped you kind of get an insight into Hargreaves Lansdown, the stocks and shares ISA, using their ready-built portfolios. Because they are ready-built, you're going to pay a little bit more for it than if you were going to do it yourself. Although there will still be a little bit of cost involved, especially if you're buying shares individually with their share dealing service. So hope that helps. Leave any questions that you have in the comments. Message me on IG if you have any, and I will happily answer them for you. But guys, thank you so much for watching. If you're not listening to the podcast, that's the podcast right there. I look forward to seeing you on Tuesday. Have a great weekend.